Hello, my name is Damian Langieri. I'm the CEO and co-founder of Domuso. I'm assuming about 99% of everyone here and watching has rented at some point in their life. And you ever thought, why was rent due on the 1st? You ever thought about that? You ever thought why first month, last month, and deposit are all wrapped into one nasty certified check when you sign that lease? Or you get a 5-day notice on the 5th. You have the money, maybe you forgot, but you're still getting a notice of eviction. So I'm here today to talk to you about the inflexibility of the rental payment. When I was 29, I teamed up with my cousin, and we saw an opportunity to buy multifamily real estate at the height of the recession. From a single fourplex, we were able to scale to over 5,000 units in 5 different states, and assets valued nearly $1 billion. But one thing we noticed was the payment pain at our properties. Our residents had stringent due dates, due on the 1st, huge late fees by the 3rd, and by the 5th, we were handing eviction notices to families. We couldn't get our head wrapped around it. But what we realized is that our own property managers had essentially turned into money managers. They were risk assessors, bankers, debt collectors. Problem was, they couldn't do this job very well. And the only way that they could enforce stringent policies was setting hard dates, big late fees, and threats of eviction to manage their pay risk. No other vertical has such inflexibility in the payments. Education, healthcare, housing. When you walk into a car dealer, you're qualified for a car based on your income and credit, and then you're given options. How much do you want to put down? Changes your monthly rate based on your budget. Then you're given an option of when you want to make that car payment, what works best for you. But in rent, that doesn't exist. Well, as an owner-operator, I wanted to understand this better and what kind of product that I would need to deploy in my properties to be able to offer my residents flexibility. And what we discovered was I would need a fully integrated ecosystem that was 100% online, that helped reduce the pay risk to my property and to my owner-operators that manage those buildings, and as well as offering financing plans for any payment, whether that move-in payment as a renter, you know, you're already moving, you're paying $2,000. In New York, you could pay up to $10,000, certified check. You could take a payment plan off of that. We would need this type of product to deliver modern payment flexibility in our buildings. So here we are. Welcome to the future of rent. Domuso is the first to introduce flexible payment technology for the rental industry. Let me show you how it works. Start demo. So we created an streamlined online checkout. We're highly integrated into the properties that we work with, so you'll see exactly what to do. We offer standard ACH as well as credit card. The 2 key exciting options that we're offering today are online certified payments. So no longer as a renter do you have to go get that certified check if your owner-operator requires that of you, whether you're moving in or a one-time payment of rent. The other exciting piece of the puzzle that we have is point-of-sale financing. So on any payment of rent, whether it's that move-in payment or you're running into a tough month, right in the software, right in the checkout, you can say, actually, I'll take this over maybe a few days, a month or 2. You have the option. What we do is we compile the data that we already have of you. We know where you live, we know what rent payments you've made, and we're able to put that together in our own algorithm. We're able to deliver credit decision within seconds. At the moment of checkout, you're given options of how you'd like to repay this payment, and off you go. Full modern payment flexibility in the rental payment. Back to presentation. So there are players today that are just pieces of the puzzle. You can go out there and get that one online payment solution that doesn't simple ACH or credit card. There's nothing different or new about that. You can go online to get a loan, but then you have a funding issue. So you get funded for that loan, but then you have to deliver the payment to your owner-operator, which may require a certified check or may require a personal check, and you may be late. As an owner-operator, I can even go and require all my residents to go get these certified nasty checks from the bank. But then again, that's a nasty process. They got to take time off, go to the bank, get a certified check, and then deliver it back to our offices, all scheduling this with our leasing managers. You can have accounting solutions, and they do exist, and they do a very good job at what they do, accounting. But they have no idea about compliance, risk, payments. But at Domuso, we built all these pieces of the puzzle together from the ground up. All of them talk together cohesively to deliver modern payment flexibility for the payment of rent. Domuso sits in the middle between property and resident, and so our business model is straightforward. We have a clear channel access. We process the payments for those communities. We're 100% free for the community, so they're happy to roll us out. Our revenue is generated off of loan origination as well as transactional fees. In terms of our acquisition costs, it's nearly zero for the residents because everyone then starts paying on our system when we operate. The opportunity is huge. There's over $500 billion of rent paid in the United States, and all of it's stringent. Due on the first, late on the third. There's no modern flexibility in these payments. In fact, 2,000 people a day became renters in the last decade. We're truly living in a renter's renaissance. No longer should rent be considered a four-letter word. Thank you so much.
So in 5 years, is this the lending company or is this a payments company when I look at revenue and profitability?
Absolutely. It's a great question. So we see ourselves as both. Payments and lending company combined together from the ground up. So a financial technology that delivers flexibility for any type of payment in rent, specifically.
Can you wait to where the preponderance of your revenues and profitability going to be coming from 5, 10 years from now?
Sure, absolutely. So where we see ourselves as a payment processor, if you look like that just in general, in total, we'd look at volume, how much volume is flowing through the system. So we target in our models 1% of the volume that flows through our system would be our bottom line revenue.
Why do property owners want flexibility, right? I understand why consumers want it, but why would property owners want it? It's almost like you have indoctrinated this like behavior that you have to like pay your rent on the first. There's like 5 90s hip hop songs like, right, you know, basically that talk about this. I mean, it's, you pay your rent before you do, you know, before you buy that dress that you want or that, you know, the beer at the bar. Like, so why would they want to change this behavior?
And that's the key thing. For them as the owner-operator, we're delivering them the money that's required. For the resident, it's giving them flexibility. So I'll tell you, if you're an owner-operator, at some point you're going to get a call from somebody and saying, hey, actually, I need a few more days. I mean, that's a huge hassle, and we don't need to see that. A car dealer doesn't manage car payments every month. You know, and I believe a property owner should not be a money manager and essentially trying to manage all that money every month, whether it's collections or giving them some flexibility.
Some of your competitors are also giving them property management software, though, also. Are you doing that too? Are you providing any other benefit to them? That's a great question, too, because we learned early on that we have to be very specialized in the technology that we build, especially when we're working with risk. This is where we see the opportunities, working with all this data. So we want to stay out of actually the property management business. I've been a part of it, I've seen it, and we don't think that the opportunity is there to innovate in that space.
What algorithms?
Sorry, go ahead.
What algorithms are you using to make the credit decisioning?
So we've actually spent time to build our own algorithms, our own proprietary data. If you can think about it, we sit at a very unique place. We're sitting at a property where we know that person lives. We know identity. We're also sitting in a solution where we can see payment history and payment trends of an individual. That's something proprietary to only our system. We have that relationship with the merchant. We are fully integrated into their accounting solutions. We have data access. So we utilize new data sets that actually have never been used before. We also integrate with Yodlee, and so we get banking level data as well. So we're putting all this together in our own proprietary risk scoring model that we've developed.
So you had 5,000 units. When you looked at your units and the number of people who you ended up having to either evict or spend time with to figure out some other alternative for them to get through the next 3 months, what was the average annual rent payment you could expect from a tenant over a period of, let's call it, 5 years? So do you lose a month's worth of rent by people not being able to pay flexibly? What I'm looking for is, what's the monetary reason for someone to sign up with you? Can you prove that this is actually going to make them more money?
100%. As an owner-operator, I use the platform on my properties. We can test a lot of things. And what we're seeing is our delinquency lower significantly, right? Because the first day, 10 days...
What does that mean?
I'm sorry. Yeah, so your collection of rent is all due on the first,
right?
Everyone has to pay. It's a tidal wave of payments on the first of the month. My manager's running around like crazy collecting it all. So by a certain date, there's a delinquency. How many people have not paid yet?
Right.
Right? That could be many things. I forgot, I didn't quite get there, my paycheck came late, whatever it is. So there's a delinquency percentage that we experience in all of our properties. We're seeing a significant reduction in that delinquency now because individuals understand their budgets, right? Now they have a tool in front of them to use to actually predict their budgets. They can say, actually, I'm getting tight this month. Oh, it looks like I can pay this over time. I'll do that. Now, the way it would be done today, they would have to go into the office, explain their personal situation to our manager, which is an embarrassing process, and then go through this. I mean, I saw families with a single mom and children. She just had a 3-week pay gap. And just 3 weeks, she had got another job. But the property's policy is, I'm sorry, if you don't pay your rent by the 10th, we got to give you eviction notice.
Yeah.
I mean, we're threatening a family with kicking them on the street. And my manager is not equipped. I mean, they can really only do what they're trained to do, which is policies that are strict and stringent. And so this is where I believe the opportunity is to completely decouple the pay risk for that owner-operator
Can you
manager.
walk us through a use case? So how does it work?
And
So, like from the perspective of a renter.
so today, and comparatively how we do it today,
Yeah.
on Domuso.
So I sign up for Domuso. I'm a renter. How does it work? I get a
100%. Got it.
notification. Yep.
Right, great question. So the way it works today is we work closely with the owner-operator group at the management level. We integrate to their accounting solutions. We thus have email access. We shoot out an email to everyone living in the community saying, welcome to Domuso. This is now your new rent payment method. Come online, make a payment. Every month we send out an email that says exactly what's due, and then they click on the button, log in, they're now given options. They have the options. They can either make their payment online, do a different method, but then they have flexibility. And there's a lot of times that a manager requires certified payments. If you've been late on rent once or twice, that manager's like, give me cash, because I don't know, this check bounced. I need you to go get me a certified check. That requires my resident to go to the bank, get a certified check, and come back to the property. We can do it online now with Domuso. Utilizing Yodlee's integration, we can double check see that bank balance is sound, it has the money inside of it, and we can certify that to the owner, all online, all with the click of a button. So that would be the process. They go through the checkout, and what's really exciting is that we can actually, if you think about this, if you can predict ahead of time that next month is getting tight, you can actually take out a financing event today, but fund it on the 1st. And that's actually the first time that's being done. So you're not taking the money in now, not using it for 2 weeks and getting charged interest or anything like that. We're funding it when it's due to the owner gets their amount. You as a resident can relax, you can have a little more cash in your bank account.
See, there are a couple other companies, there's a couple of companies you didn't mention here. Actually, I stipulate that there's a market here, because we spent some time thinking about this. But there's 2 companies, I think it's PayLease and ClickPay.
Sure.
Which weren't on your list of competitors, which are going after the same market. And we've done a lot of work, and one of the things we've found with consumers is kind of paying the convenience fee. So paying an additional 1, 2, 3% on top of your rent, they get frustrated with very, very quickly.
Sure.
And so I think there's a huge value proposition to the property owner for this. The question is, should they just pay 100% and just have a SaaS software solution where effectively the renter is not paying a premium? And then my related question is, on the financing risk, are you taking the financing risk, or are you kind of backdooring that with a third party who's then taking the credit risk on loans?
Yeah, great question. So 2 parts.
To add on to the financing risk, if you have a bank partner, at what rates are you getting it, and then what rates do you have to charge your consumer in order to cover whatever arbitrage there would be with a bank?
Sure. So to answer the competitive sets.
Yeah.
Truly what we see today in the market, as I see an owner-operator, there are options out there. They're doing a really bad job. I mean, most of the time we go to property that has an online legacy system, only about 15, 20% at most are engaged in that online product. So already that option, 70% of most rents paid by paper check anyway. So that's where we see the disruption. That's where we see we can take advantage. In terms of the payment risk, to answer that question direct, we've chosen to be our own balance sheet lender at this point. Because our risk scoring algorithm is being created as we speak. Every month we deliver a new model. And in the future, we actually do seem to be able to have an option to be able to sell that off if we choose to do so. It's actually absolutely in our roadmap. So today, our job is to utilize the data access that we have to build new scoring models, to be able to predict risk at a better rate. If you think about it, most of these populations that live in our communities would normally never get a chance to do any sort of financing on rent. So we're actually hitting them at a moment where they would normally not get that option. And our data access, our algorithms that we are creating, is taking on the risk. And to answer that question, we are taking on loss. If we do see that there is loss in that equation, we price for the loss, as a lender does.
So what's the average rate of interest that you're charging to the borrower?
Right, so we're risk-based pricing. So in terms of, if you've got good credit, you get better rates. As we develop our model, we're going to be able to actually solve for better and better rates in terms of delivering that rate. So there's other online lenders in the space too that have really, they're able to go after the really hard credit profiles, and they're almost at payday lender rates. This is nothing that we're delivering. We're not a payday lender. We're a term loan product. And most of these individuals actually, their only other option potentially could be a payday lender. And usually that's because the data that those payday lenders have, they don't know who they are. So they have to have very high interest rates to take on that risk. We have a lower risk profile. We know who this person is. We know where they live, and we know how often they pay
rent. But is the fact that the product exists as a property owner, are you more likely to have adverse selection of people who are less likely to be able to come on as signing leases?
So the absolute platform has nothing to do with the approval process. I, as an owner-operator, we're going to stick behind the guidelines of fair housing. We have our standard application we offer everyone. They are qualified based on those standards of application. The next step, though, is now the payment, and that's where Domuso comes in. We then say, hey, now you have options on these payments, and those options don't require the management owner to put a 5-day notice on your door just because you got a tight month. Now you can actually schedule for yourself. The only option today, they have to go into our manager's office and explain their personal situation.
So is there, sorry. So there's a lot of bad behavior in this space, right, with predatory lenders. And so essentially what you're saying is that you're not going to be like them. So is there going to be a certain level of risk or debt that a renter might have that you're just not going to take on because you can charge exuberant rates, and you don't want to do that because you don't want to take on that behavior?
100%. We're not about charging incredible rates. There is a point where someone is just not going to pay. We're getting actually very good at intention of paying. This is not a purchase that you don't need. So for us to deliver honest, flexible payment interest rates on whatever we're delivering to this individual is really based on the data access. The higher percentage is that you just don't know enough about an individual.
How much do you have outstanding currently?
So actually, the breakdown of details, definitely happen to have that conversation with you off stage.
Okay.
We do keep some of those numbers close to our chest. Just to give you high level, we're excited to say that our loan cohorts are going to be profitable at the end of this year. And that's exciting because at that point, we're delivering credit to people that normally wouldn't be able to ever get credit. College students. They don't even have a credit profile yet.
But you can't talk about installations or loans outstanding or anything like that yet?
Detailed questions, absolutely can have that discussion with you off stage. No problem at all. But it's an exciting place to be because in lending, it's about access, and about delivering credit, it's about data access. And that's the exciting piece of where we sit. That's where we see the opportunity.
How many units do you have that are using Domuso now?
So currently we have 20,000 active user accounts on Domuso.
For how long?
So we had our MVP product last year. And so this year actually was a commercial launched ready product at the beginning of the year with highly integrated accounting solutions that are fully integration. So we actually see tremendous growth this year. We're excited to be going down this path of growth. It's truly needed. And it's not just a national issue. This is an international issue. And the fact is that 60% of America has maybe $1,000 saved. Every 45 days, they're finding themselves in some sort of financial crisis. And really today, my managers are becoming their, financiers, and they're the ones that are struggling to figure out, should I evict this family or not? I don't know if they're going to make this rent payment.
And how are you acquiring customers?
So, okay, really quick.
Okay, sorry, go ahead.
Just, how are you acquiring customers? What's your marketing strategy?
100%. It is a direct marketing strategy to large owner-operators today. So they control 50 communities all up to 500 communities. This cohort of owners control roughly 40% of the entire 45 million rental household market nationally. So that's what we're focused on. It has some great metrics behind it, low acquisition cost. We operate as their payment provider on site.
Right.
All right, guys, give it up one more time for
Thank you.
Domuso.